My point is that I'm ready for stock values to come down so I can go back in again. It is Friday, January 24th. Forgot to remove the cover from the mic. Excuse me. This is the video log that takes 30,000 to a million. It's definitely going to happen. And today I mainly want to update you on the account status and my plans for the future, a near-term future actually, kind of near-term future. I want to give you an amazing fact and something that you could be doing in a way that you could be thinking about your account if you were employing a more portfolio managing style of your account. So yeah, I want to give you that tip and see how it goes. It has to do with, not to let the cat out of the bag a little too early, but it has to do with purchasing power. It has available purchasing power and how you can think about your account in terms of that. It also has to do, sorry, I'm not going to show you the account yet. It also has to do with the two videos that I've done before on leverage and also on why you always want to be a net bull on the market, which I am kind of at the moment. I mean, I am. And so before we get into it, I want to just quickly calculate on the fly with here how much purchasing power my account actually has. All right, so before I give you the account amount, so I'm sitting at, you can see over here that my total margin that I have available, I have it limited at 1,000 right now, but it's 90,000. I could be spending up to $90,000 in debt. So that's purchasing power. That's, you can think of that number as a number that you have available for you to spend on stocks and bonds and things like that and ETFs. So that's purchasing power, right? So if you have a credit card that has $15,000 on it, but you haven't spent any of that money, that's purchasing power. Okay, if you know, especially it's purchasing power, especially if it's liquid already, right? Liquid means very close to cash, easily tradable security and or just cash. Cash is obviously the most liquid thing ever, right? And then second most liquid would be something like a savings account, where you just have to transfer the money out of your savings account into your checking account and then spend it. And something a little bit less liquid but also pretty liquid is stocks, right? You could sell stocks now and have the money available like tomorrow or even before that. So if there's some if a bank offers some kind of, you know, quick transaction or whatever. So that's what liquidity means if you didn't know. Something that's illiquid is like, for example, a house, right? It's going to take you a very long time to sell a house. And before you get that money, you're going to have to find the right price. You don't know exactly how much you're going to get. With stocks, you don't know exactly how much you're going to get until the sale is final, but you have an idea, a better idea of how much exactly your stocks are worth. Something that's somewhat Freudian slip. Something that's somewhat liquid is something like physical gold, where you can make a sale today, but you have to like drive down to the you know, pawn shop or whatever, or the precious metals dealer, and you have to exchange your gold for cash, and then you can spend that cash unless you find somebody to trade you directly with your gold. So it's a little bit liquid, but not really that as liquid as cash at the moment. Anyway, so 90,000 worth of margin. So that's available purchasing power for this account. And on top of that, over here, I have $23,000 of cash, but actually I have less. I have 19,888, so about $20,000 plus a little bit over 90,000 in margin. So that equals to about $110,000 of purchasing power. Now, not only do I have that purchasing power available for me to roll into stocks, but I also have a bit of bonds. So look at the account here. If I go into the main page, you'll see that I have about, what is that, over $4,000 in BND, which is just a total bond fund. So that's $4,000 there. And not only that, but I also have over $5,000, $5,300 into emerging market bonds. So that's another $9,000 that I could roll over into into stocks. And I think that's pretty significant. 19,000, call it 20. So $120,000 worth of buying power right this on this account. That's a lot. So if there is a major correction and I decide to employ all of it, okay, that is some huge leverage strategy type of move. All right, I mean, it's going to be enormous. I've done a video on leverage strategy. That's exactly how this works. So with this account, I want to be able to stay nimble and employ all kinds of different techniques whenever they're appropriate, whenever it's the right timing. So that's the whole point of this, right? So I have some dividend payers in this account. I have, I'm also selling stocks. I'm sorry, selling options, selling calls, selling puts. I'm going to be doing probably some debit call spreads and stuff like that in the near future. And I have a diversified account. I have some REITs, etc., some international funds, dividend payers, etc., some Apple, some precious metals. So the account is pretty diversified. There's many different strategies and many different techniques that go into this. And so far, I've been doing really well. The goal with all this stuff, the week is not looking too hot at all. I'm negative 0.8 on the week. Sorry, I'm getting a little distracted. And let's see what the S&P 500 is on the week. Oh, I'm exactly on par with the S&P 500, which is kind of weird because I never traveled the same, but except this 1 week. How about the month? Let's take a look at the month. So I'm up 5.9%, 5.09 on the month, and S&P 500 is up only 1.95%. So I'm beating the market in the month, so that's great. If you're interested in the all-time chart and you haven't seen it before, this is what it looks like over here. So I started taking this account seriously somewhere in August 28th, which is when my first video was published here on the YouTube. And my account was sitting somewhere around here, plus 4.6869%. Now it's plus 47. So I've gained about 44% since I started the account a little bit more than a year ago, maybe a year, 5 months or something like that. Decent returns. The reason I wanted to pull up the all-time chart is because this is when I employed the leverage strategy, and you can see the returns. I mean, I mixed it with option plays and a bunch of other strategies, but the leverage is what was allowing me to have this kind of move from a fairly flat account. Before that, this account didn't have much money in it, not much movement, and honestly, I wasn't really taking care of it. I wasn't really managing it. So, but now that I decided to start this project and go and take it to 1 million, I've put a lot more thought and effort into it. So that's the available purchasing power, $120,000. Now, by the way, the account, of course, since I started talking about it, I'm probably net long about, I want to say about 70% at the moment. So correlated with the market about 70%. The lowest I'd ever want to get to is 50%. I'm sorry, 55%. So you always want to be a little bit long in the market. You never want to get below 55 because market could go on for a very long time. And even if you're convinced, if you're so dead sure, like right now, we've had such a enormous run up in the last 10 years of market gains, it could go even further, and you never know. I mean, even if you have the thesis correct and you know exactly the valuations are way off the charts, and you don't know when this correction is going to come. If it comes, it might go on for many more years without a correction. You don't want to get stuck out the market just collecting barely any interest on bonds or savings accounts or CDs or something like that, because then you'd be falling behind and you wouldn't be winning the competition that is the market. And I don't suggest that for myself. I don't know about you. What Obviously you guys are responsible for your own decisions, and if you're not sure what to do, you should consult a financial advisor. I'm not a financial advisor. I'm just an investor, just like you. That's just been around for maybe 15 years in the market or so. So I've seen a thing or two. So I feel like it may be interesting for others to see what I'm doing with my account and what kind of style I have when it comes to the markets. That's what's interesting about it, is that everybody has a different style, different approach to the market, and we can all learn from each other. But anyways, this is for entertainment and informational purposes only. I wouldn't recommend copying anyone's trades, including me. You guys should find your own style and your own trading habits and what works for you in order to make money in this market. Now, now that we're done with that speech, um, why do I have such a huge buying power, and why do I have even any money in bonds? And the main reason is that, in my opinion, my personal feeling, my personal opinion from when I'm looking at the markets here, is that a lot of the stuff that I even own is getting a bit overvalued. Overvalued in objective terms. There are many indicators out there that one can look at. The most common one is the PE ratio. So PE ratio basically is price to earnings ratio. So what that means is that is the price of a stock divided by its earnings. And so when when that reaches up into the 30s, I mean, that's kind of bubble territory. I think that's like 1929 to 2001, 2000 style stock market bubbles. So the valuations are a bit crazy, and traditionally, in the past, there's been a major correction after the valuations reach that high. And obviously, we have things like the Warren Buffett indicator and all this kind of stuff. Of course, the heater decides to kick in, as you know. So anyway, I just turned it down, didn't turn it off this time around. Um, so that tells us that some of these things are valid, but it could have a blow off. We haven't seen a blow off top yet in the market, so they could happen, and that's why I'm considering doing some kind of call option strategies in order to take advantage of the potential blow off top, but at the same time limit my. Is that rain? Is it raining right now? What's going on? Let me turn off. Oh, never mind. It's just the neighbors. It's weird. Anyway, sorry, I'm doing this on the fly. I don't do any edits or anything like that. Although I do have to cut something out of the video this time around, but it's really nothing. It just misclicking, so nothing super serious. Anyway, so I think the market's a bit overvalued, and some of the stuff on my account as well. So I'm gonna probably lighten up. I've already moved some money into bonds. I have 5,000 merchant markets, 4,000 into bonds, like 20 into cash, which I'm probably gonna employ in some way into options. But my point is that I'm ready for stock values to come down, so I can go back in again. Obviously, it's worse to not be invested over in the long term, but when you do that, even though I recommend people who don't know anything about the market to just stay invested the entire time, when you do that though, you don't have a chance to win against the market. You don't have a chance to be that 10%. You only have a chance to be you only have a chance to beat the 90% people in the market who try to beat it, but you can't ever be higher than that. And I want to be higher than that. And if this account's going to go to a million, I have to be higher than that for at least a few years, especially in the row, to get some kind of momentum going. So I need to do anything within my knowledge and power to try to beat the market without losing money. That's another thing, is that the risk profile of the things I'm buying has to make sense, right? I have to be hedged properly, somewhat properly, and I have to make sure that the account is not in danger of losing major chunks of its value in any given day or week. So it's a very interesting balance, difficult balance. But anyway, $120,000 purchasing power right now. It's a little too much, but I'm ready. Like, are you ready? Let's do this. Okay, I think that's it for now. I'll talk to you guys probably on Monday. All right, peace out.